Hey, everybody out there with us once again is a very familiar face in these economic times. We keep having Mark Collinsworth on over and over again for updates on a still very shaky economy. Mark Collinsworth is a CIO of Vera Global Wealth Management. And Mark, this week, the president insisted, despite everything else that's going on, everything to the contrary, he insisted, quote, the economy strong as hell. Is it?
No, I've never seen the economy being strong when you've had two consecutive negative quarters of GDP. The textbook definition of a recession is two negative quarters. It's just again a person just is disconnected from the economy and just doesn't know what's going on.
Okay, we'll get to more of that in a minute. But first, something else he said this week. He was excoriating the oil companies for what he calls price gouging, that what they're charging does not reflect the costs of extraction. It's the oil companies jumping on the bandwagon. They see an opening here to take advantage of the situation and saying that they have to charge more, and they really don't have to charge that much more. What's your response to that?
That is a bunch of bull crap. And the reason why is because if the companies were price gouging, their profit margins would be expanding. So historically, most of your energy companies have a profit margin of 10 to 12%. So give you an example, if oil's traded at $100 and they have let's say a 10% profit margin, they should make $10 at $100 a barrel. Now, if they were price gouging, that number should be, they should, instead of making $10 of profit, they should be making $20 or $30 of profit based on history. The reason they're making more money is oil's not trading at the historical norms. Let's say oil goes from 100 to 200, still making 10%, but now it's $20 of profit. So as long as the profit margins are consistent with how they've been over the course of oil over the last 20 years, there's no price gouging. It's a failed presidency with failed policies that's trying to pass the blame on to somebody else because elections are right around the corner.
And you're saying if they charge less to give everybody a break, that would not be sustainable, feasible economically for them.
That is correct. And that's another thing that he doesn't understand is a lot of these companies, the gasoline companies are basically sell the oil to convenience stores. A lot, like Exxon. Exxon does not own a lot of convenience stores. They own very, very few. All they do is the advertising on it, and family businesses actually own the convenience stores. And believe it or not, the convenience stores, they just try to get people in there to buy the food and stuff because they only charge about a 2 or 3 cent markup on the gasoline to try to get the customers in there. So even though Joe Biden's saying that, he's actually attacking small family businesses at convenience stores.
Yeah, he's even talked about the mom and pops charging too much, that they should reduce their prices. And they have an even thinner profit margin, so they've got to charge so much, even though it's a razor thin profit margin, because they're being charged more for the oil deliveries, correct?
Correct. They're trying to keep their gas prices as low as possible because where they make their money is when you pull in there and you're filling up your gas tank. They're hoping you're going to walk in the store, buy a Coke or some fried chicken or a snack, and then go get back in the car. That's where they're hoping to make their money at.
All right. He also said again, he said this in the past, that the oil companies are not taking advantage of the leases they already have. They're not drilling, even though they can, with these leases that have already been granted to them by the federal government.
That's bullcrap also, because the president has said numerous times, if you look back at his campaign trail, he says he will not allow any drilling on federal land. So which is it? Okay, I'm going to give you a lease. You can go drill on federal land. You got the permit from this department over here, but this department over here says you can't go on the property because it's illegal to drill. So which is it? He's telling two different stories. He's giving orders to one division to say issue the permits, and then he's giving orders to another division of the government and say, hey, don't let them on the land. So which is it?
All right. So you've also said in the past that another part of this equation is that with less drilling, with fewer options to drill, fewer wells, fewer acreage, they'd have to charge the oil companies. The cost of production for the oil companies increases because the fewer wells have to be attended to for a longer period of time, which drives up the cost of labor and a company cost. So therefore, that itself increases the cost of extraction, correct?
Correct. So as supply goes down and demand just stays flat, the prices go up. Give you an example. Let's say you have 10 oil wells, you have 10 people, and they're charging $1 per oil well for those 10 people to get the oils. That's $10, right? Well, if you go out there and you cut the oil wells in half, you have now 5 oil wells, but you still have 10 people trying to spend $10. That's now $2 for each oil well, and that's why the prices are going up.
Okay, but when you say there are fewer wells now and less drilling, less oil available, actually it's the same as before Biden took office, isn't it? So why is the price going up?
Because he shut down those oil fields. They're not producing. There's oil fields that have been shut down because, like on federal lands, he has told them they cannot drill on federal lands. So the workers on those federal lands at an oil well, they have totally shut down operations, not to mention the pipeline.
So what you're saying is there was existing drilling on federal land that was shut down when Biden took office.
Correct. Let's not forget, under Donald Trump, we were hitting record low gasoline prices under Trump. Why? Because Trump was out there saying, drill, drill, drill. They were drilling across the board in places they have never drilled before. And then when Biden came in, he reversed all that.
All right. Now, another thing, he shut down the pipeline, but the Keystone Pipeline, it was stopped. It wasn't actually producing when he stopped it, correct?
That is correct. But here's the thing. If you know someone is going to, let's say, if you know someone's going to break into your house, what are you going to do? You're going to take preparations for it. But the simple knowledge that there was going to be a pipeline opening up to increase the flow of oil supply, traders automatically did not want to buy oil, because why did you want to buy oil if you know that there's going to be this huge surge of supply in and going to drive prices lower? You'll just lose money. Now that the pipeline is not going to come online and that future expectation is not coming in there, traders now are buying it up. That's why those contracts they trade are called futures, because you're bidding on a future price. You're not concerned with today's price, but you're concerned with the futures price.
So they're calculating what, 6 months down the road about what the future price will be.
Correct.
And they know because of the shutdowns and the other restrictions, the cost of oil is going to be more.
That is correct.
So therefore,
you want to buy oil futures.
Yeah, so they're already calculating that cost in, even though that's 6 months down the road. Now, yep. Is that the way it works with other businesses?
That's the same way it works with, looks like, pork bellies, gold, cotton, soybeans, cattle, you name a commodity. Everything that trades on futures is based on the future. It has nothing to do with the present day.
All right. Do the American oil companies, Exxon, et cetera, even though I guess they're multinational, but do they also buy foreign oil to put on the domestic consumption market in the U.S.?
Technically, yes. I'll give you an example. Let's say Exxon has an oil well in the Gulf of Mexico. In Mexico, they're drilling in Mexico. Well, they'll put that oil on a tanker and they'll send it to the refinery, because there's no refinery there in Mexico. So they send the oil to a refinery there at New Orleans or Houston, Texas, and that's where they turn the oil into gasoline. So technically, yes, they do bring foreign oil into the United States.
Now, the oil that Biden is releasing from the Strategic Petroleum Reserve, that goes into the system, but the oil companies don't get a markup on that, do they? Or do they?
No, the SPR is sold to oil companies at fair market value.
So therefore, how does that work? Because it's actually bringing the price down to some extent.
Correct, because you're putting more supply on there. So it's just easier for them to get it. So, if you have 10 barrels with 10 people wanting 10 barrels, well, they can bid the price up more. But you put 20 barrels out there and those same 10 people want it. Well, now there's all this extra out there, so it just brings it down.
So the fair market value of oil when the strategic reserve is released is based on more supply, and that lowers the cost.
Yep.
But that's not sustainable. It's in terms of a national emergency.
Correct. The SPR, Strategic Petroleum Reserve, now is hitting like extremely low levels. And the worst part about this is they're going to have to basically refill it at some point. So somewhere it's probably after the election, because Joe Biden said they're not going to tap the SPR anymore. They've got to start rebuilding it. If they start rebuilding it, what's going to happen to the price of oil? It's going to go up.
Well, I think he just said this week that they are going to be tapping into it more.
they're going to tap into it more between now and I think through November. But I think that in previous statements, and that's the funny thing about Joe Biden, as the days change, so does his remarks change. They may actually stop doing it in December or January, but you just never know, because once Joe Biden opens his mouth and his handlers behind closed doors say we've got to retract that, you really don't get a lot of information.
Also, what's also on the market now is oil that we are buying from China, correct?
Correct.
And
which
that
technically is Russian oil, which is technically Russian oil.
Right, right. So actually, Russia is selling the oil to China, and China is reselling some of that to us.
That is correct.
So we're still buying Russian oil.
Correct.
So all of Biden's designs about how he was going to bring down the Russian ruble and how he was going to hurt the Russian economy is just the opposite effect.
He actually improved the Russian economy.
All right. One last question before we get to the economy in general. Are you telling me, because most Americans, myself included, suspect that when a supply tightens and items on anything become scarce of supply, in addition to the real elevated costs for actual legitimate reasons, there's always this temptation to use this, take advantage of it to hike the price even more. Now, are you saying there's none of that going on with oil, with the oil industry?
I'm sure there's probably a little bit going here. They might be upping it maybe, 10, maybe 15 cents, but they're not doing anything extravagant. Nothing like what Joe Biden says with price gouging. When you do price gouging, historically, we're talking about 200 or 300% increases in the price. That certainly isn't happening here.
All right, turning more generally to Joe Biden's statements about the economy. This week he said the economy is strong as hell, and he was asked if he's worried about the strength of the dollar. He says he's not worried about the U.S. dollar because against other currencies, we're doing a lot better. Inflation, he says, is worldwide. It's worse off than it is in the United States elsewhere. So the problem is the lack of economic growth and sound policy in other countries, not so much in ours. Dispute that.
I don't know where he's thinking. It's a global economy. The only reason why inflation is a little bit higher in Europe is because of all the problems with the Ukraine. But he's just disconnected. I mean, again, he says the economy is growing. How can it grow when the economy, the GDP numbers are negative? Negative numbers are not growing. It's contracting. It's shrinking.
Well, they keep talking about a strong job market.
And that's basically the only strong place you have. I mean, you look at the housing market. The housing market is dropping like a rock right now. You look at other economic indicators, they're dropping like a rock. The only reason why the job market is growing is because higher food prices and higher gas prices are forcing people that were not working, who were basically, maybe doing a little odds and ends, maybe mowing yards and stuff like that, and they could fill up their gas tank by mowing 2 or 3 yards. Well, now they can't do that. They have to get back in the job market and actually get a steady cash flow because they can't afford food and they can't afford gas.
Well, another problem is that even though people are going back to work, the wages are not keeping up with the inflation. What is it now?
I think it's either 8.3 or 8.4. It's actually gone up just a little bit here in the past month.
Yeah. So wages are still several points behind inflation.
Correct. And I think the reason why you haven't seen companies really be aggressive on raising wages to keep up with it is because the Fed's been very aggressive so far. And a lot of those companies are sitting back thinking, if we just waited a little bit longer, the Fed's going to be successful with getting inflation down and we won't have to increase those wages. And another theory on that, look at the price of gold. Gold's actually fallen over the last 12 months, has not gone up, because gold traders are actually anticipating the Fed to be successful with getting inflation under control. Hence, gold's not going up.
Also, Mark, the jobs that people are returning to, that's a key word, returning, because the Biden administration makes it sound like these are newly created jobs. Actually, it's largely people returning to pre-existing jobs that were shut down during COVID, correct?
That's correct. When you have these shutdowns and these waitresses and bartenders basically are told they have to go home and can't work, they count that as a job loss. but then you say, hey, we're going to lift the restrictions, come on back. Oh, now all of a sudden it's a brand new job. That just doesn't make sense to me.
Yeah, well, the White House spokespeople, are saying that Biden has done the work to make the economy strong, and that's its first priority, and to bring inflation down, grow the economy. Now, of course, we could take a lot of issue with that, but in the meantime, it's not getting any bit better that we could see. And overall, a point that you brought up, but a lot of people are still missing, is that in order to bring inflation down, they keep raising interest rates, and that results in
that will eventually lead to a recession, which will cause people to lose their jobs. And when you don't have a job, you don't spend money.
So that's the plan, is
Yep.
to increase interest rates so much that employers have to lay off masses of their workers.
That is correct.
Well, yeah, that's not a very comforting solution to, people are worried about whether they're going to have enough gas money or medicine money, or, even for the basics now.
That's correct. It's not a good strategy. It's not a good plan. But for the Federal Reserve, it's really their only playbook that they have.
All right, Mark, before we close, how'd the market do this week on Wall Street?
It was up. I think the S&P finished the week up a little bit around about 2% for the week. And the reason why it had actually a very strong rally today. Overnight markets were actually down on the S&P futures, but an article came out in the Wall Street Journal saying that the Federal Reserve was closer to stop raising rates, and that's actually got what people excited, just looking for a reason to buy. But if you look at the Fed funds futures, there's a 100% chance based on the Fed probability indicator that they'll raise rates here in the first week of November, 75 bips. And there's also a 50% chance based on those futures positions that the Fed will raise interest rates another 75 basis points at the December meeting.
Wow. That's a lot of increase. So again, the rally we saw on Wall Street this week, the small rally, that indeed is transitory, as Biden said about inflation.
That is, and that's also the scary thing. If you look back through history, based on where, look at, looks like PE multiples and inflation, if you adjust those PE multiples for inflation, we'll use inflation's running like it was, we're at the same levels. I think we're at 1983, 1984. If we get back to the same valuation metrics that we were back in 83 and 84, based on an 8% inflation rate, you're looking at about another 25% drop in the stock market.
So again, you're maintaining that it's going to get considerably worse before it gets better.
Correct.
And it will start getting better when?
Probably maybe the end of first quarter, early spring, maybe early summer.
This coming spring, it could be that soon.
Yeah, and I'm really stretching when I say that soon.
All right, and that's because by then you think the Feds are going to start bringing down interest rates again.
Correct, and that's kind of another danger zone. Historically, the Fed only starts cutting interest rates when they feel like they've lost control and things are going down too quickly. I'll give you an example. A lot of people, like let's say 2008, the Fed actually started cutting interest rates in March of 2008 because they felt like the problems were just getting out of hand. But look what happened to the stock market after they started cutting rates. Things got really bad.
All right, Mark Collinsworth, the CIO, that's Chief Investment Officer of their Global Wealth Management. Thanks once again for the update on our still very shaky economy. Mark, thanks.
Thank you very much, Larry. And always remember, it's always the darkest before it gets really freaking bad.
That's something to sleep on tonight. Thank you very much, Mark. Mark, we'll see you again.